Hi, this is Elliot Wave Sage. I want to do a quick market update. Like always, none of this is financial advice, so always do what's best for you. Just use this for education and entertainment purposes. The Dow Jones is coming out of this wave 4 correction into the fifth wave, and it's pushing higher as expected, looking for another high here to complete this cycle. The top and a cycle degree top here. Now this top should produce a pretty sharp pullback. Could probably come back down to this trend line somewhere around 38,000 is what I'll be looking for on this pullback, and then it's buyable on 5. Now there is another scenario where you could get a 1-2-1-2 and go deeper. In fact, even retrace all the way back down to some of these lower areas here. So we just don't know what this how this correction will play out. But it looks like we are in that fifth wave. So let's take a look at where we are on the fifth wave count. So a couple things we want to keep an eye on is the peak here. So you got this peak right up here, and we're looking for it to stay below with bearish divergence between this peak and these peaks. So we want to keep that in mind and see that bearish divergence. As you can see here, you can see those peaks here. Okay, so you can see those peaks. We want to stay below, especially this peak, this peak. This is in our wave 3. So if we take that out, then you're getting into a 1-2-1-2 count. And this isn't a 4 anymore. This was another 1-2. This was a 1-2-1-2, and we'll actually go vertical. And that would be a melt up, the moon boy scenario I've talked about before. And the ingredients I think we need for that type of situation is massive dollar weakness, and probably with China as well participating in some kind of melt up. Right now, China is still pretty weak, so there is this possibility that there's another something like a 1, 2, 3, 4, 5, something like that, and then this whole thing is a 1, 2, and come out. Let's say we double correct. Let's say we do something more complex here, and this 4 isn't finished, and we decide to take another swing down. Then I'll probably be looking at this as a 1, 2, or the top is in, and we're just kind of off by a swing, right? So that's why it's very dangerous to buy right here, because if this does make another push down, we'd come down to 40,000, 39,000. More than likely this top is in, or it's another 1, 2, and you can go even deeper. So I really want to trade long against 41,857 and buy the dips that present itself against that low here. So let's look at this time frame here on the 4-hour. You have no divergence, but the 4-hour is pretty overbought. The 45-minute, no divergence, but look, the 45-minute cycle will continue higher. So we probably are going to get this fifth wave price action, and again, it could just keep extending, so it's not recommended to short it. 1, 2, 3, 4. So you have some kind of 3, 4. You get a 5, and then you could have a bigger pullback against this low here. So if we do get this fifth wave, then more than likely that 4 is in, and it kind of negates the double correction lower. If we were to just keep dropping in the week, we won't make a fifth wave. So then you are in play. This is a connector wave of some kind here, some kind of 3-wave connector wave off of this low here, and it would go for another swing down, another swing lower, down into this area. But it doesn't seem likely. It seems like we'll get maybe a little bit higher and then a pullback, something like this, and this should be buyable. And again, it could still pull all the way back down to here even, and this is buyable against this low for the final push higher in this final wave higher until we get this pretty big peak that should be emerging. But this was a really strong rally off the bottom, starting to try to erase some divergences, but I do believe it should have a 4-hour reset here soon, and then we'll have to wait and see what kind of how deep that reset is going to go to really determine where we are. But this is where I think we are at the moment, and I don't see any trades in this area at all. I just see if you don't already have a trade in place, it's you just on the sidelines waiting for a setup to emerge if there is one again. And I don't like shorting it even if it makes a new high to 46,000 because it could easily take this divergence out, and again this could become another one too, and then you could be shorting a 3 of 3 in wave 5 grand super cycle 5. So you got to be really careful trying to top tick the market here. So the better trade is to buy the dip for now, but at some point this 3 should get set and it should be a real dramatic sell-off that should be multi-month in nature, maybe 6 months, equal in time. Something similar to this correction would be normal. Now this took a lot of time and it was very complicated. So this actually, there is a possibility of more of a flash crash scenario where it just kind of goes as crash correction. So it may not be as long. It could be shorter in time. If it just depends on the situation. Typically, if wave 2 is complicated and long, wave 4 will be short, will be flash crash and quick, and vice versa. Typically you see that, but it's no rule that says you need to. Classical view is this correction should take about the same amount of time. I'm just saying that I wouldn't be surprised for the more of a flash crash correction here. And then we should have one more high to end the grand super cycle. Now the SPY, here we are where so we did hit the buy area. We are bouncing in this third wave. I did change the count because this was too long and too complicated to call this a 4. So you have to call this a 1-2. So we will extend. So there's probably more upside in the technology sector that will drive the SPY higher. That's what it looks like to me, as this 3 of 5 is continuing to play out, and we still have some divergence here, and that means a couple things. We could be looking at a flat, and we can come back down back down to 566, which is why I have that highlighted. But that would be buyable if it were to do that in this, kind of like a WXY or an ABC. If it doesn't do that, it's 2's in, and then it pulls back in a 1-2. But here you do have divergence, so more than likely that that's what we'll get. So more than likely this is close to topping. It may have already topped, and we should be pulling back now, and we could pull back, and then this is buyable against this low, and again this pullback could come all the way back to fill this gap. We just don't know how it will look, but this is kind of the count I'm going with the SPY for now. Higher, buying the dip until this low breaks, and just keep trying to find long positions as this continues to push higher. Again, since it is 5 up, and you look at this, it looks like that's 3, and that's 3, so that's the corrective structure. This is 5, so I don't, the only possibility to get it dropped down here would be some kind of ABC, where it was a WXY, and that's your pivot here to down here. So I do have this area here, potentially could get hit, but it does look like it's going to top off here. And my preferred view is this view. There are many alternatives. There's no trade. in the indices, except, if you want to buy the dip and try to play this, great, but I'm showing you there's another possible outcome that could be still in two, like I'm telling you here. So you still have to be careful trying to, you know, you could get that and then buy it here. But since we did break this high, we would expect an extension higher and this not to go too far down, something like this. So that's kind of that's the count, but there's really no trade or even trade setup that I can see. But good luck on that. And then the triple Qs, kind of the same looking chart. Here you have four. Let me see if we need to update this. So again, we have this as 4. Could this be another 1, 2, and we get a 3 like we do in the SPY? I think so. Just looking at it, so we'll have to tweak the labeling a little bit to accommodate that count. Let's go to the 4-hour here. So so looking at this here, so you see how you have this lower, the RSI is here, but that RSI reset came down, but did not take that peak out. So we only corrected this one cycle. So I would change this a little bit, so it's a little different than the other counts. So I would still keep this 1, 2 in place, and then I would have this just like I have here, but I would just change the label a little bit, and then I would just kind of label this whole thing. See, it has 1, 2, 3, 4, 5. So I would just put this 1 here, and then put the 2 here, and then that's probably the right way to forecast this one. So I think it's a little different than the other one. So something like a 1, 2, 1, 2 setup. So technology could be very bullish. It's a very bullish setup. So so it's interesting charts here. Again, it could double correct down potentially, but we have not taken the high out. Here there is looks like a little bit of bullish divergence here, very little. So looks like it's probably 5 up, but again, it could be a connector and still come down here with with an A, B, C. It's possible. So again, no trade setup because each outcome is probable, but I do think that's probably where we are with this count, and then that puts us as like a 1 and we're in 2. So something like that. So more than likely this is tops in here. We'll get in this pullback in 2. And it could go pretty deep. Again, we just don't know, but it looks like it's another 1, 2, 1, 2 setup. There could be a trade emerge here on the long side on this too, just like we see here. So maybe this week we'll see a nice 3-wave drop and can get a nice buy on 2 to play this final 3 of 3 on the indexes. That's kind of the idea. So then the Dow Jones, don't really like trading that. So I would rather be in the SPY and Qs for a nice 3-wave move down. But more importantly, the SPY, since it did make a new high, is even a better trade than either of those two. So an SPY with 3 down would be a potential buy opportunity in the coming week where you have something like this. I'd like to buy that if you can get a connector to project your target later in the week. But as we know, the market could just keep running, so we're not guaranteed a deeper pullback, but it just seems likely we're going to get that on the 4-hour cycle. Now IWM is much more bearish, unfortunately. Looks like here you have 5 down with an ABC. If that's the case, this wave 2 should be finished at any moment for a big push lower down into this lower area, somewhere down in this low 200, and then we'll have a lot of sideways to higher action at some point, which should allow the small caps to really finish their pumps. This is where I would expect most of the small caps to really pump a lot when it's in this 4, 5 ABC, this part of the wave. But I think we got this big part coming, which also must mean interest rates may be ready to go higher again. So that's something to keep in mind. We'll go back to my other charts in a minute. But as you can see, so I think for right now, the SPY looks like some kind of like blow off top is trying to finish up here. The triple Q's kind of the same looking thing, blow off top. Maybe we hit the 600 eventually. The Dow Jones looks a little more confused. Doesn't seem to be the same structure. It could be even already topped in 3. I'm just giving you what I think the best count is right now, but uh, there's really no trade in here, and I really don't like it. So it could easily double correct. That if it did, it wouldn't be a 4 in my opinion. It would be another 1, 2 of some kind, or it's already in 3 and potentially in 4 already, and that would bring it down to like 38,000, somewhere like that if that's the case. So it's just something to think about here. So I don't, again, I label it just for label, but I don't really want to trade this. There's really no good setup here. But the SPY, the Qs, the IWM, I don't like it either, because if it's peaked in X, we should be seeing 140, 130. That's pretty nasty decline coming. We probably won't ever get above this price for a long time. Now, if we do that, break this, it's very bullish for the overall stock market in general. If we can reclaim this high, because then you'll have 1, 2, and then you'd come out and you would break this high, and you would have essentially a moon boy situation in the small caps, something to this magnitude, just like you saw here, but even on a higher degree, so be even more fork to the upside. So if the small caps can take out this high, I'd like to buy it on any pullback, even if it's a minor pullback, just to get on. But I want the market needs to prove itself and take this high out. Buy in here, you're still in this scenario, but taking this out would be a very significant sign that whatever bear market people expect may not be happening anytime soon. So just keep an eye on these on that level right here, this level right here, very important level that needs to get defended if you're a bear. So we're in a very very kind of at the moment of truth here. Let's take a look at where we are in the Russell. So we didn't quite get to the area where it typically reverses. Just fell a little short. I'm just going to kind of highlight this. This is the area that it would normally drop if this is the count, right around here. We should start to see this reverse pretty soon. A lot of pressure, and that may be the pressure here, right? The pressure is coming here, and then the Dow Jones, possibly one more high. So let's just finish that labeling here on this little leg that we have drawn up. Get one more little high, and then a bigger pullback down. Okay, something like that. Something like that. So that's kind of what I'm looking for on the Dow Jones, kind of something like this. All right, let's go to the other charts and look at some of the other stocks here. So let's go to Bitcoin. Everyone's really interested. Bitcoin is in this consolidation area. So until it can reclaim 109.8, this double correction here is in play. If it can reclaim it, it's negated, and then it's either this is wave 2 or it's a wave 4 of some kind. Let's take a look at where I want to go with it. I think right now, if we look, we have not taken out these peaks, so this is a sign of this could be some kind of 5th wave. Well, if that's a 5th wave and that was a 4th wave, then what was this? Did this correct it, or are we extending in wave 5? So again, I don't show that here, but if this was a 4 and this was 5, this would be 1, a 2 of 5, right? And there would be 3 of 5. So even if it's a 5, or it's what I have labeled here, we'd be entering some kind of wave 3. I think you can't argue with that. It looks like to me this move here, this drop here corrected this whole cycle. Let's go back, take a look. I mean, it looks like to me from this point on, you've corrected this corrected this whole cycle. So I would not look at this as any kind of 4. I wouldn't label it as a 1, 2, 3, 4, 5. I think that's incorrect because here's your 3, there's your 4 and 5. So crypto, this is truncated. So once you take that high out, I think you really want to be more aggressive in the crypto market if you aren't already trying to find positions. There are some setups out there, but right now I would just say it's kind of like, you look at this chart right here. It's real messy. This could be a lot of things off this low. 1, 2, 3, 4, 5, and an A, B, and maybe we're in C. Or perhaps it's already in a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. That's a very bullish setup. I call that the crash setup, but this would be a crash upward, right? So this is why 100 times leveraged things that were invented for these kind of setups. We could define your risk better here. So like, what if it's a 1, 2, right? 1, 2. I mean, just think about this for a minute. 1, 2, 1, 2, right? 1, 2. So what if you placed a massive leverage bet and you stop out right here? You could, and this, if this is right, this thing's probably going to go up 30, 40%. It's about to probably jump from here to 130, 132 before people realize what happened. If this is right. Now, if this is wrong, then of course, then this is some kind of connector wave, and we would come back down at least to this area, and we're in this kind of wave too, still. So there's a couple things, right? Or the other more bearish alternative is we're still in this wave too, and then this is some kind of flat where it's like W, A, B, C, and it's just crash down to this 84,000. That's why it's very tough to kind of guess the setup. It's like a gamble here. There is potentially it could be a huge explosion higher given the Elliott wave count on the bullish side. The bearish side though, you could risk and could see it come down to 84. But either way, with the high broke, we will be at higher prices for sure. It's just how we're going to get there. I look at this chart and I see, let's take a look at the daily. Pretty much a risk divergence right there on that little dip right about here, right there. So then you have a little bit of bullish divergence. So there is, like I said, there's a lot of things to say. Maybe we do need to bleed down more, and we have to respect this too. But I'm just showing you some different ideas. And this is the resistance area if that's the case. So I think right now the labeling I'll go with Bitcoin is I can't call the 2 in unless we take this out. So I think we just have to label it this way, and then I'll just say there's no trade. It's still sidelines if you don't have an existing trade, but there are individual cryptos that are showing some trade setups, but Bitcoin is not one of them. So I'm just going to label it this way for now, and we'll have to wait and see which scenario we get, but there's really nothing to trade. This is just for your entertainment. This doesn't mean, oh, you should go short it because I'm showing this, because I showed you it could be already done, and it could do. So it's really a sidelines. It's really just stay on the sidelines because there's not a trade. I don't see a trade here other than I'm just labeling the chart just so you could see a label. Now, if we go into some of the other things, oil may be starting to turn lower. Trump's really putting pressure on oil, so that may be pushing it down. Let's take a look at gold. Gold, we're looking for one more all-time high. Once we get that, gold is at risk for a major top, for a really big pullback that many will be surprised because everyone's so bullish on gold right now. So gold is continuing higher, but I believe you need to be careful in it as it tries to finish this peak out here that we're in, but it should continue higher. It does look like it's still got more upside to come. Silver's kind of stuck like we expected. Gold makes a high. Silver's just stuck in a connector for this, and then when gold drops, silver will drop with it. Then the dollar index looks like we're pulling back, and so is it another 1-2-1-2 here? As you can see, we reset the whole cycle. Let's go to the daily reset. Looks like you have here 1-2. So we're just gonna have to change 1-2 here. So we have to do this kind of like change the label a little bit, put the 3 there or 4 there. So we have an extended fifth wave, and we're pulling back on this 5, and so we'd be looking for more dollar weakness, but let's see that we can't have that be the shortest wave. That would be too short. So given that, so let's kind of go back here, look at that let's relabel the dollar here like this. Now see, we made 3 and we're coming down, so this is just a 3-wave move. So I think the dollar index is continuing in this sideways connector. This is just 3 up. So we're still in the B wave then of the dollar. That's what that tells me. We're still in B of the dollar, where we have not made the move higher, which makes sense because I think if we were, we'd be in a bear market right now of some kind. So I believe this is your W here, some kind of W. We're in some kind of X wave and some kind of Y wave. That 1, 2, 3, and you have 3, 3, 3. So this is a lot of dollar weakness, and I think that does support the pump in of the markets that we should see. I think that's what we're going to see, the pump in of the markets here, and that dollar weakness is going to help the markets. But I do think this other leg will emerge, which will really be the bear market wave, and it makes sense because we weren't selling off. So we're still just in this connector. So the market overall, while it was going higher, it was really just trading sideways still. But when we do start to trend higher, then and we do switch gears, that we should drop the market. And so that was kind of the clue that maybe this wasn't the C leg, it was a connector. Because the dollar index, the market was not responding to the higher dollar like you would have expected. So it's a very important level that has to hold, though, right there. So the dollar is bearish now. This should help pump some markets in this final top that we have emergent. So let's look at this, and that looks like looks like maybe 5 down. Looks like actually we're in a 1-2-1-2 setup. So we could see some dollar weakness coming out. So that's probably the Fed being a little more dovish than people expect, if that's the case, coming up. So it could be something like this. I think that's the count for now. Something like that. And it's only because of the significance. It's only 3 waves, and we already reversed it. So we did not get a 5th wave. So that's how I look at the dollar. So I do think the dollar's got more downside. Looking at it this way. Let's go to the 10-year. Now the 10-year did complete 5 up. Should make another swing lower, so we should see yields continue to go lower, but that should be that should end somewhere around this area here. That should end, and then we should continue higher. So that's the 10-year. Let's look at the 2. Let's look at some of these other ones. The 2-year trading sideways. Looks like it's probably still in some kind of wave 2. Could even be in this wave 2 still. So it's kind of sideways, but it should break higher at some point. And I think that's where I'll stop for right now. So I covered kind of the major items. You know, it does look like we have more upside in the market, and especially if the dollar index is going to support that, that's going to help things. Let's ignore that chart here. But basically, that's what I can see. And now if the dollar is weak, you know, of course, the yen could strengthen relative to the dollar, but that would make it appear that the yen strength is coming, but it won't harm the market because it's more about dollar weakness than yen strength, than a yen causing risk off. You know, so that's kind of like that misleading, which is why you can't just you know, correlate the yen and trade based on how the currency moves, because it's all relative in the end. And again, I'll just leave you guys with this final chart here. So looking for a top to emerge with a pullback. Same thing here, some kind of pullback. Ideally, 3, buyable. No 3, it's not buyable. If it goes any higher, then it's a very shallow pullback, very bullish, continue higher. And as you can see, if you just kind of step back and look at the wave count and where we are right now, it just looks like to me we have more upside. I mean, it's just the market is just trying to get all the shorts and bears to pretty much give up and then get as many people in the FOMO in at the top. That's what it's doing. It's topping out in this manner right now. So we'll see this kind of parabolic-like top emerge. I did show you the weekly oscillator needs to come higher. And then we could start talking about a major peak in this 3 once this weekly has reset. If you look, the weekly is gonna should come up. The monthly oscillator is actually starting to come down, and this is the divergence that we saw in the Great Depression crash. And like we can go back, if you guys missed that video I showed earlier. I mean, we can go back and if I go back to this 1929 period here and just kind of show you. And again, this is very, you know, something to think about if you're a perma bear. There's something to think about waiting for the right setup here. As you could see, we peaked here. The monthly was actually bleeding down. You see how the monthly was actually dropping here? Look, the monthly fell, but the price action went up. You see that? You see that divergence? That's the clue. That's what we want to see. If we see something similar in the next couple months, then we know what's about to happen. We know what's about to happen because it's not technically sustainable, and then you're like, oh wow, that's that. How did that? But they didn't have these kind of indicators back then. And then if you go to the weekly, again, go back to the weekly. If we go all the way back in time to the weekly, you know what happened here. I can get it right for you. Here, we go back to the weekly. As you could see, we were oversold here in this area, and we needed that weekly to melt up here. See, the weekly needed to kind of come up here. I'm sure all the bears, if there were bears back then, were saying it was going to crash here, but the oscillator wouldn't allow that. You see how it went sideways? The price went sideways here. It allowed this oscillator to reset itself. Now, just that's what we saw in January, guys. We saw the same essential thing. You see that, the reaccumulation here? That's what happened in January. Now we're coming out of that, and then we should get something like this here, and then we should get something like this here. And then also just keep in mind, look at the regular RSI, right? Look at that bearish divergence, right? So you had the reset of the cycle, the oscillator here, the stochastic RSI, but then relative to you have divergence, and then the monthly oscillator was actually dropping, while the market went up almost 30% in about 3 months. Just think about that. Think about that situation. So that's what set up the conditions that set this up, because it wasn't technically stable. It was an unstable situation. We see that, then we know this is good. This is it. But we don't see that right now. Right now, I believe we're trading somewhere like around either here, and we'll get this big pullback this week, something similar to that, or we're already here, and we're going to get this final bit. So one or the other. That's kind of where we are in the cycle. All right, guys, that's all I got on the video today. Good luck, and I'll do a live stream later and answer your questions. Talk to you later.